Hi, this is Stephen Mead. Over the years, I've read hundreds of books and spent thousands of hours developing what I call the bullseye belief system. And I've used that system to develop my own companies, as well as help others learn to be specific, targeted, and focused to get exactly what they want in life. This is the Bullseye Guy Podcast. Stephen Mead again, back with another Bullseye Guy Podcast. As you can tell from our illustrious backgrounds, we are still in Corona quarantine. I certainly hope that changes before long. I'd love to get back to the studios in downtown LA with Eagle and Inna and the whole Groove Radio team. But for today, we are fortunate to have Alex on with us, coming to us. I don't know where he's got a blackboard in the background, so I don't know if he's at UCLA or not, but I think we'll figure that out here shortly. So Alex, welcome to the Bullseye Guy Podcast. Give us a quick introduction on yourself.
Yeah, Stephen, thank you very much. It's a pleasure to be here. We know each other for a while now in the blockchain space, and I've been following your podcast, and I'm very glad to be part of it. Thanks for having me. As you mentioned, yeah, this is my at-home backboard. You know, it's not as fancy as the one I have at UCLA, but it does the job. And we're all on lockdown. UCLA apparently is only coming back the fall or late summer, still not like very clear. But yeah, my name is Alex. As an academic, I teach blockchain and security to UCLA. Where we co-founded the UCLA Blockchain Lab, which is now a student-led organization mirroring the Berkeley organization with more than 300 members. It's a blockchain at UCLA. Invite everyone there who's listening to join. And if you're a student at UCLA and you're interested in blockchain, it's a great community. And I've been teaching blockchain business applications and security tokens. Ended up creating a book, which we thank you for your support, and we have a code for all your listeners to get the book for free. It's STO book-Maid, your last name, and I think I'm running out of the 30 seconds intro, and as a day job, I run 7, which is it's a consultancy / investment firm in the space.
Perfect, Alex. And we're having a little jarbled every now and then. I feel like the Joe Biden digital platform issues the other day, but let's back up if we would. I know you from before UCLA, but talk to me about what the UCLA blockchain component is, because I could never quite figure out, was it a lab? Was it an accelerator? Was it a private-public partnership? Talk to me about the UCLA component.
Sure. So it was a journey, right? So in 2017, I've been teaching at UCLA for a little bit over a decade now. I used to teach strategy and marketing courses and always been involved in the startup scene. One of our great partners at the Anderson School is Tech Coast Angels, who you're very familiar with, and I'm a member there. We were having a meeting, and some of the faculty members there were looking at blockchain investment opportunities back in 2017, early 2017, and we had this idea that if UCLA was the school that invented the internet, or helped the very early stages of the internet, which way you want to look at it, we should also have an effort in the blockchain space, which, as we all know, it's a groundbreaking, revolutionary technology. So we started the UCLA Blockchain Lab as a faculty and alumni group. And then as we grew in traction in the school, we were able to solidify a curriculum, which I teach on blockchain business applications and security tokens. There is also a coding class on blockchain at the computer science department, and another one on Frontier Tech. And we decided as the footprint got bigger and bigger to make it a student club, so that students would be able to drive it and have a lot more flexibility interacting with private companies, events. We had Tim Draper, we had Joe Lubin speak. We had a variety of people, all the way from Philip Liu from Bitmain to Tim Draper over there. We've worked with Panasonic, Ferrari, other companies like that. So today, it's called Blockchain at UCLA, and it's a student-led organization with a faculty oversight.
So let's talk about that for a minute, Alex, because I think there's a lot of conflation of the word blockchain, and I talk about it a lot. Blockchain to me is a technology that powers a bunch of things. And then the cryptocurrency to me are really glorified tokens. They're almost like penny stocks. And then the security token is sort of an amalgamation of a token with some, let's call it, rights and authorities and things like that. From a UCLA standpoint, and even your standpoint, because you've got an investment group we'll talk about, what's the distinction for you and a difference between, let's just say, blockchain in general and what people think it is, and then let's talk about some of the STO stuff.
Sure. So I think that's a great question, and it's very important to educate the general business community about it. One way I like to break it is blockchain is a revolutionary way of creating database architectures, right? So think about your MySQL, your Oracles, and so forth. It's a way to store and distribute data. We can get deeper into the benefits of it, but generally blockchain as a technology, like you mentioned, is a database technology where you're moving from a centralized traditional database architecture to a decentralized database without the advent of automation of what we today use as paperwork. Then that technology allowed for a series of companies to raise money on the internet via ICO campaigns or TGE, token generating events, if you want to call it more politically correct, that were for a good amount of time raising a lot of money. And then eventually, because that inflow of cash, which is a signal of how hungry people are, I think we got a little bit of a connection. Okay, got back. Then that inflow of money, which is an evidence of how much people are looking for non-traditional investments or alternative investments, led the SEC to look at it and deem the vast majority unregulated securities offering, because these are investment contracts.
Yeah.
That transition happened in early 2018. And together with that transition, as UCLA, we decided to direct all our research to how one can raise money via a token generating event on the blockchain or using blockchain technology that is compliant with the SEC and other regulating jurisdictions. One of the reasons people around the world ask, why is the SEC the big gorilla in the room? Is easy. It's because the United States represents roughly 40% of the bonds and equity market all over the world. So if you're an institutional investor, you want to be part of that 40%, you look at the SEC, at what the SEC is saying is good or not good as a security offering. And that was one of the reasons why we decided to write the book, to elude business owners, entrepreneurs, and students about the ability to raise money on the internet via blockchain technology, fully regulated under SEC laws and other famous jurisdictions like the UK or Singapore or other jurisdictions such.
And so the curriculum then at UCLA, because to me, again, I draw distinctions. The blockchain coding component, just like you said, it's a glorified database. It's an evolution of the database, which is good. Just like the internet runs a fintech sector, the internet runs websites. The internet runs a bunch of sectors of the industry. Is the UCLA program, when you talk about teaching blockchain coding, there's blockchain coding into the database side for different business applications, which is different than the database side of a token, which to me is just an extension. It's a business application of the blockchain as a platform. Is UCLA doing business coding applications or security fundraising side?
Well, technically both, right?
Okay.
The focus had on coding and exploring different blockchains. For those who are not familiar with the intricacies of the industry, I like to call a blockchain a specific accounting book, right? So you might have the Hyperledger accounting book, you might have the Bitcoin accounting book, you might have the Ethereum accounting book. One of the things that the industry is evolving is how these books intercommunicate, and that's the interoperability. So at the computer science school, where most of our students at the blockchain at UCLA Student Club reside and are students of, they focus on the utilization and the creation of business applications on these different blockchains. So they've explored things with Hyperledger, they do workshops on Ethereum, and so forth and so on. The class that I personally teach is a non-technical course for business students, entrepreneurs, business leaders, to understand what blockchain is, how blockchain can influence their specific industry, healthcare, real estate,
Yeah.
you know it. And then a component of it is if you want to raise money via a token generating event, which you nailed it. A token is nothing more than a digitized share, or like the SEC likes to call it, a digital security, which NASDAQ has been doing it for a while, and NASDAQ now has a full-fledged 0 to 100 solution of generating a security token, that it's available for anyone to purchase and generate their own security tokens. That's also part of the curriculum. But my specific course is a business-focused course.
Yeah, and it's interesting, Alex, because like for our technology, we've built a marketplace, again, kind of like Amazon, and an invoice goes out, and we needed a way to update SAP and Oracle, these big accounting systems. And so just kind of like to your point, we looked at Stellar, we looked at Graphene, we looked at these different, quote, blockchains, and all they are is just a little different coding and functionality. Mm-hmm. And at the end, we picked IBM Hyper Fabric because the Fabric blockchain database communicated better with SAP and Oracle. And so for us, we're using blockchain as a glorified database update solution.
Mm-hmm. Which has a lot of benefits for you and your business model. I know your business model is a great business model.
That's why I'm saying the business application side of blockchain to me is fascinating, and where you and I both, I think, try and move the industry forward is I try and divorce the conflation that blockchain isn't Bitcoin. Blockchain's not cryptocurrency. Blockchain has a bunch of functions over here that are going to make things better, faster, cheaper. It's a better PDF. It's a better communication tool. That's it. On the investment side, it's interesting because I still know some of what NASDAQ is doing. We were with the vice chairman in Davos. What I ended up doing, Alex, and we're not going to spend a lot of time on it, I separated ours out on the token side. And I'm going to explain what I did, and then I want to bring back to your explanation of the security token. Because a security token to me was a sort of extension of a stock. I've had 3 public companies. So I could go to a small cap public company. It's more expensive. It has a lot of auditing. The token generation didn't, but there were some restrictions. We separated it. We raised money on an equity, traditional equity, and then we created a separate, what I called a liquidity token. And the liquidity token was issued through Malta on an international basis, simply because the US, the US is the big gorilla in the room, but because it's the big gorilla, it was the big gorilla, meaning you didn't want to mess with it. And so now these security tokens, I think, are getting out. So in your world, explain what a security token is as a benefit to traditional equity and what the parallels are, because there are some similarities and some differences.
Yeah, no, very good question. And I think that that's one of the main questions C-level executives all over the world where we have been doing corporate education for UCLA kind of ask, right? Why am I doing this? Why should I look at this, right? The world has been working on pen and paper fine up to now. I think that, like you pointed out, the similarities, it's the same thing you have been doing for ages. Call it, since the early 70s or 80s, when people started to invest in early stage companies. You're issuing a security that represents a share, which is under a general term of an investment contract. So any investment contract, that can be a debt structure, that can be a debenture, that can be like whatever you want to call it, an investment contract. In this case that you're pointing out is a share in a startup, right? Traditionally, that paperwork maneuvering or the transactioning of that paperwork is, one, very costly, two, limited by time, because like from the world I come in and you come from, we had to go around and meet
We lost you for a second, Alex. This is the challenge with Zoom. Let's wait a second, let you come back. We've got a frozen screen. So
okay, back.
There we go. Now you're back.
Okay, cool. All right, so where did I stop?
You were talking about the similarities and differences of going to market with a token. Uh-oh.
All right, I'm back.
Okay, we're there.
Okay, cool. So very quickly, very similar to everything everyone has been doing, the traditional, institutional, and startup world. You've got a piece of paper that represents an investment contract, and you go out into the world and you try to raise money against that investment contract, which is nothing more than a swap, right? I give you a contract, you give me something like money, cash, bars of gold, whatever it is. So the similarity is that. Now, you get that piece of paper, that contract, which every traditional investor and institutional player is familiar with, and you create a digital version of that contract stored on a blockchain. Now, what are the benefits? The benefits is that mainly all the transactional costs and the transactional difficulties that limit us to reach a wider audience are automated via a smart contract. So that's kind of like, for me, if you want to boil it down, traditional to do, like there was only 8 hours in the day, so you could only visit a certain number of people to talk about your investment contract. Now, because that is digitized and stored on a blockchain, you can reach a much wider audience. And then because it's automatic, the contract is enforced automatically via smart contracts, which is a feature of blockchains. Then you can do dividend payments. Just to conclude, one great example that I like to use is it shocks people that when you say that in a country like the US, only about 3,000 companies pay dividends. That's for one reason, because it's a lot of paperwork and it's very, very costly to do so. Now, with a security token or a blockchain technology, that could be significantly minimized to a fraction.
Yeah. And I'm going to expand on that again, because having OTC companies. So I've had three that are OTC is just the basically small bulletin board. And then you've got MA, then you've got NASDAQ, and then you've got the big boys on the New York Stock Exchange. The interesting benefit too, kind of what you were talking about, I think, Alex, is liquidity. When I had a public company, I'm on the bulletin board, the OTC. It's limited to a certain number of investors, a certain number of hours that it was open in the US. If I wanted to go to the ASX in Australia or Toronto, it's expensive and time consuming. Digital tokens have this interesting parallel where you've got multiple exchanges running around the world. So you've got different liquidity in different continents. You have different liquidity on exchanges. You have a 24-hour trading cycle. Those are all some advantages over traditional direct public offering stock side. And then the other one I talk about is fractionalization. And the fractional side, I think, is really going to be important. 98% of the world's population doesn't have access to traditional financial instruments like you and I do. And you can't go buy one share of Amazon stock at $1,500. Well, now you can with Robinhood, but for the longest time, you couldn't buy one share of Amazon. Nobody would sell it to you. But if you want to buy fractions, it's like a brick of gold is $500,000 and you can buy a $50 gold coin. So this aspect of the digital token to me is fascinating because of the fractional nature where people can buy smaller pieces of something that they might not have had access to, as well as the exchanges. Does that make sense?
For sure. You just nailed it, right? So we go back to kind of like the general concept. If you would fractionalize, let's say, a building, a four-store commercial building, into thousands and thousands of shares, and do the cap table of those shareholders, and then do the dividend payments or the profit sharing of that, 10 office-based building, it would be a nightmare. You wouldn't be able to do it, right? But then because of fractionalization, because of the idea of automating this via a computer, that's now possible. And then the other point you raised, which is very important, is liquidity. In the old days, if you came and I invested in one of your companies and I had a share and I wanted to sell to an accredited investor buddy of mine who is a TCA member, traditional angel investor, or I would go up Sand Hill Road and try to sell that share, it would also be another nightmare. I would have to do exchanges of contracts, get you involved, call you, bother you during your lunchtime, get you to agree to who I'm bringing in. And now with the upspring of all these exchanges, one that I really like, T0, that's potentially going to be one of the key ones here in the States. Saum is a great CEO, doing a great job at bringing a lot of broker dealers and ATS licenses into the place. You're going to be able to transact that with other people that are members, just like you transact a NASDAQ stock. Not only NASDAQ, you mentioned NASDAQ. NASDAQ has a full-fledged STO solution. Imagine you could get your company listed on NASDAQ by issuing an STO.
You still have the traditional problems, and that's what people don't understand the exchange. I still have to develop market makers. I still need liquidity. Just because I get listed on NASDAQ doesn't mean anybody knows I'm there any more than if I get listed on Bittrex or Binex or OKX, any of the other exchanges. There's still this marketing aspect of an awareness. That's why it's so fascinating to me. It's a lot like a traditional kind of OTC early penny stage stock, but it's got massive democratization of allowing people in, which I think is cool. Let's for the last parts here, Alex, let's switch gears because you also have an investment group, right? So when you talk about, again, this is where it gets confusing is people go, oh, it's a blockchain fund or a crypto fund. And what I've realized is there's certain crypto funds, which means they're investing in the token technology for returns. A blockchain fund might be investing in the company because the company offers blockchain, which is different than trying to buy Bitcoin at 8,000 and sell it at 9,000. So there's a distinction too between a crypto fund, in my opinion, a crypto fund and a blockchain fund based on the ethos of what they're doing. Talk to us a little bit about your fund and what you guys are looking for and what you kind of see interesting in the industry.
Yeah, so most of our work is focused on security tokens. I remember in 2017, we used to go around town and around the world and talk about blockchain, and personally, one of the reasons I got so involved in this space was that I was a straight believer that ICOs were unregulated securities offering. And people used to ask me and say, Alex, you're with the establishment, you're with the man, you're going to burn. And my answer was, this is such a small market. It's only going to get mass adoption when it hits institutional level. And since 2018, we've been seeing institutional adoption of blockchain. Banks all over the world started, like you said, trading Bitcoin. And Bitcoin for banks was just like a barrel of oil. People are making money with barrels of oils. We're a bank. We're going to make money with Bitcoin, right? So for us, we try to focus a lot on security token companies or companies that are involved in that space. We've helped a good amount of clients now work with their security tokens. It's important to point out to people, like you said, it rests on the issuer. The for promoting, just like every single early stage company, right? You're not going to get listed and out of the blue, people on your door and say, but security allows you to reach investors which you traditionally wouldn't be able to do so because you're only one person, you can't be in two places at the same time. So that's one of the focuses we've been doing for the last, we started in mid-17, so we're almost 3 years old now. Okay. We also looked at different things. We looked at mining. Mining was a great interest of mine. And we're now just like, I don't know, we might be post-halving now recording this, or a few minutes before it.
Yeah, we're right at the edge.
We're right at the edge. So it's blockchain for me is just like you would say, we invest in startups, but we look at a certain aspect of startups that deal in the blockchain space.
So if you're investing in a blockchain startup that's doing an STO, as an investor, are you comfortable then just taking that security token, or are you looking at the security token with the same parameters that you might look from an equity component? Are you putting preferreds? Are you putting, oversight? Are you putting the same overhang on? It's just a security token versus traditional equity.
It's the latter, right? So it's the same thesis. We look for governance. We look for founders that are legitimate and are passionate about their technology. We are advising now a DeFi company. For those of you not familiar with DeFi, it stands for decentralized financing. So fintech companies that use decentralized databases for collateralized loans. Yeah. So we're looking at that space, and we're looking with the same angle as you would look in equities, and looking for the same kind of preferred governance, board seats, but with the innovative eye that if we're holding a security token, that we his
We lost you on the last part, Alex. I'm gonna wait for you to come back because you're talking about if you're holding a security token.
I think I got froze.
Yeah, the last little bits here. I want to hear the last part of
Remote
that.
now.
Oh, he's going out and coming back in. There you go.
All right.
Yeah.
We're back in.
All right. So what you were talking about is if you're holding a security token. So I'll close and wrap it up with this is what I like about the security token side, because I'm my own investor in my own companies. I'm in some of my companies 8 or 9 years because it takes forever to get liquidity. So the security token aspect, if it works, gives you accelerated liquidity. As an investor, it gives you ways to raise money and capital. What I had to do just on ours is the reason we did it split, Alex, we did equity because some of our investors are still traditional hedge funds or family offices or not venture, we're not doing venture, strategic corporate, and they didn't quite understand the security side. So we had to do equity to give them that traditional guidance and compliance, but I did a separate liquidity token and I gifted it to them. And some of these guys don't even know what it is. And I'm like, I'm gifting you this token that if it works, you'll get liquidity on an international exchange and still have the equity for compliance. And so the security tokens to me are interesting because when they start coming together, it gives you, I call it retrospective evolution. Like retrospectively, here's what's worked, but here's how you evolve into the token side.
Yeah, and I think that that's the right way to do it, right? You should offer your investors both the ability to go paper and transfer paper into token, or if there's, you know, advanced or innovative or want to play with it, then they just take the security token. And then potentially you can have like an image of that PDF stored in the token for them to review.
Yeah,
but you're right.
We just did it as treasury stock as a separate. And then we're actually going to use the exchange to raise our next round of funding that's non-dilutive.
Oh,
so
awesome.
A non-dilutive equity round back to our original equity holders. You know,
I like that.
Yeah, that's why I said there's some creative things that are exciting out there. And again, I appreciate your time, Alex. The work you've been doing in the industry is great. Like you said, I've seen you around the world just like me trying to push it forward. So UCLA Blockchain. The name of the company too, though, it cut out earlier. We'll still put it on the website. What's the investment company?
It's 7CC Blockchain Investments, and our URL is the number 7ccinvest.com.
Perfect. All right. Alex, appreciate your time. Steve Amid, another Bullseye Guy podcast coming to you from Beverly Hills, even though it looks like Malta. That's not Malta in the background, it's Monaco, but hopefully we'll be out of here soon at the studios. But for today, we're out of here. All right,
Thank you so much, Stephen. Pleasure. Cheers.
Thanks so much. All right. Bye-bye.